Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Thursday, the 3rd of August 2017, and the trade we're going to look at today is a little bit different. Don't really talk about this too much in our daily videos. This is a 30-minute chart of the pound dollar, and as you know, the dollar's been extremely weak of late. It seems to be super sensitive to the political landscape in the US, and as you can see now, the price is absolutely booming, and I'll explain why I thought that would be the case as we go through the video. But here's the reasons why, and I just want to point your attention to this area here on the chart. Now this is what I refer to as context. Now usually it's context pre-trap, and there will be always a trap even if it's a trend continuation, but sometimes context is great for a trend reversal or a reversal in the prior move, because what it does is this strong move up, the bigger the candles, the more vertical the angles, the speed in which price prints. Did you notice how that popped really quickly? Well, that was certainly different to the way that price was printing, the speed of price in this area here, right? Did you see the difference? It moved more quickly. So there's a speed to price, and that helps sort of solidify the trapping process, because many people get drawn into that process. Now, as I said, not every move is a reversal. Context prior to a trap, then a reversal is great, because as I say, it draws traders in one way and then nails them on the other side. However, there are occasions when a trend continues, and you've got to be able to sort of understand which way you want to be trading that particular pair, so that you get some sense of that anyway. So anything with regards to fundamental analysis, what's in the news about the currency, etc., and that's all important, so you get that basis for your bias. But in this case as well, you can make, on top of that, you can obviously look at the chart and see if there are any clues to whether or not it will follow through or reverse. And the reason why I thought this would follow through is obviously the dollar's weak at the moment. However, it's also this area here, and what you had was a build up of price bouncing off a level of support, and then it comes back and it bounces, it comes back, it bounces, comes back and it bounces. But where would the stop losses be placed in this scenario? And it's a really interesting thing to sort of note and keep in the back of your mind. Whenever you see an elongated move like that, what it does is it creates a bit of a dilemma for the trader. Just think about it. If you were trying to get involved in this area of the chart, right? So if you wanted to get long in here, and you'd been interested in the move because of this prior move that you perhaps didn't get involved in, and now you're very excited to get in this move. This creates a dilemma when you have that elongation in the price action, because the problem is, where do you place your stop, right? So it's a problem because people don't necessarily want to go down here because of that elongation of that prior move. So what they'll do is they'll look for areas more close, like if you will, a bit of a oasis, if you like, and somewhere where they can hide behind. So what happens is, when you do get an area that starts to develop and become support, you're going to start getting a build up of stops under that structure. Now what you have is a breach of that. So in essence, you have a little mini stop hunt that occurred in here. Now then, stop hunts. Stop hunts. If this is, what is it? If this is a continuation, as I said, not all things reverse, and not all things are traps and reversals in the opposite direction to the prior move. Some of them are obviously trend continuations, and the way you play that is you look for areas on a chart where the stops will accumulate and where the stops get tagged, and what you can sort of glean from that is, if price then continues up, then there's a good chance that something fairly large did some buying in the face of that selling, because when traders go long off this level, their stop loss orders in here are actually sell contracts, right? It's always the opposite to whatever price had been doing, or whatever traders had been doing. If they were going long in there, and obviously you can see they were going long, then their stops equals sell orders. Now those sell orders are great if something big wants to do what? Some buying. So you don't have to sort of look at this in hindsight and go, oh, I wonder. It's actually there in front of you if you know what to look for, and if you allow it to play out somewhat, as in this case. So I was expecting this to pop from here to the upside because I thought something big had done some buying here, and this was just a broader trend continuation from this initial pop, and that's what it looks to be. So just going into a bit more detail at this level as well. The other part to this is that you've got a little level here where traders are obviously been selling off too. Right, they're trying to catch the top, and you get some entry cheese in here, which is important. Entry cheese is just really the price action prior to any traps developing. So if you look at the market here when it popped off that level, so you had you had one touch, two touch, like a triple top, and then price starts to sell off. This is what makes a trader sell, does it not? This is what makes someone sell at a level of what would be resistance, minor obviously, but it's resistance nonetheless. Same in here. So this is entry cheese, this is entry cheese, this is entry cheese too. It's always different, but it's always the same. It's always some type of reaction off a level that actually looks like, gives the impression at the hard right edge that it was working as the trader would expect. So here's a level as an example. So price comes up, comes down, comes back up. Let's say it's a double, anything from double top onwards, and when it comes back into the third touch, the trader's primed to look for any clues for price to start selling off at the level, right? They've done their analysis over here and over here, and now they're looking at this and going, I want to go short here because people made money in this scenario, so this looks like it's doing it again. People are told that the more levels touch, the stronger it gets. So all eyeballs are on the reaction to price. The reaction to the level when it comes back into it. And what happens is traders, this is the hard right edge. Right, we all have it. This is price in the here and now, and we all have this void to the side of our charts. And what people don't do is they don't consider it. They are looking at that historical analysis to do their technical analysis and come to a judgment that this is a level that they want to participate in. Then it's very much about how price reacts off the level. This is your entry cheese, right? This is what this is, etc., etc., etc. So, and then that lack of foresight as to what's coming into the future. So what happens is the trader gets the reaction they're looking for, and of course, what do they do next? They pull the trigger and take the trade. Where do the place stops? Probably above that level. Lo and behold, very predictable, right? Profit targets maybe on the other side of the range. Who cares too much about that at this stage? It's more about the stops. They go in and then boom, price catches them and traps those traders in those positions because they believed it was going to follow through to the downside. So there's a trapped group of traders in here. Price is now popped, it's nailed them, and as I said, this is your stop hunt. So something big has probably gone long in here as a trend continuation play. So if you get some type of pullback, this looks like a great little trade. If you'd like to come and join me in my brand new inner circle, learn how we look at the markets in this way and learn how to trade the financial markets totally counter to what you've been taught, then click on the link below and I'll see you on the inside.